Now, here is one thing that I really want to talk about for a long time, and that is most people think that success is trying to find the next hot stock or trying to time the market perfectly. Or even in diversification, they think about investing in different geographical sectors, different industries, and different businesses, but it's all within equities. The truth is, in reality, what matters more is asset allocation. And that means how you spread your money across different types of assets. Today, I will walk you through 7 key asset classes, which includes real estate, stocks, bonds, precious metals, crypto, business equity, and lastly, cash. And I'll show you how you can access many of them directly under one platform. And if you want to learn more about personal finance and investing, join us at close to 22,000 members in the Telegram chat group at Money SG. Firstly, let's talk about why asset allocation matters. Because you will soon realize that majority of your portfolio returns and risks comes from asset allocation and not individual stock picking. You may ask the reason why, and that is because no single asset class performs the best every year. In the year of 2020, it was the small cap tech stocks that really led the way to market gain. In 2021, we experienced a cryptocurrency boom like no other. Then in 2022, when the market was in correction or even a crash, T-bills and fixed income products reigned supreme. Lastly, in the year of 2023 and 2024 onwards, all the mega cap companies like Max 7 or AI related stocks led the way to profits. So from here, you can see that for the past 5 years alone, proper asset allocation will help you smooth out the volatility and help you reach your long-term goals. Now moving on, let's dive deeper into each of these asset classes, starting with real estate. As we all know, property is Singapore's favorite wealth builder because we have seen how property values have grown in the past few decades. But I'm sure both you and I know that if you want to invest in an investment property, you will need to come up with at least 6 figures down payment. And that's not even including the ABSD if you want to purchase multiple properties. Where at least we have a different asset class that has exposure to property, and that is REITs, which stands for Real Estate Investments Trust, which allows you to gain exposure to Singapore properties as well as global properties with just a few $100s of investment. And what people really like about investing in REITs is that they pay you regular distributions out of their profits, which is essential when you are investing for income, especially in your retirement years for the cash flow. So how to invest in REITs on Mumu? First, you have to download the Mumu app. Then on the app, you go to Markets, click on SG, then REITs. Then you will find a list of S-REITs that you want to invest in. Alternatively, you may also consider investing through the ETFs if you want a diversification. Number 2 asset class, let's take a look at stocks or ETFs, which is the growth engine of most of your portfolios. Stocks are simply explained as a piece of ownership in businesses which are listed in the public exchange. And then for ETFs, which stands for exchange traded funds, it allows you to buy a basket of different stocks, and that grants you instant diversification across different businesses and industries or even geography. So on the Moomoo app, you can also find different stocks and ETFs. For example, in the US, you can find the Magnificent 7 companies. If you prefer a US focused ETF, you can look at all the ETFs that are tracking the S&P 500. And then locally, for Singapore, there is the STR ETF, which tracks the top 30 public listed companies in Singapore. Third asset class that I want to talk about is bonds or funds. Bonds or bond funds are simply a form of borrowing. And since they borrow money from you, they have to return you in the form of interest or coupons. They are rather steady, rather boring, but also important because bonds provide predictable income even in market volatility. Now, I'm sure as Singaporeans, you all already heard about T-bills and SSBs. All these are government guaranteed assets which give you guaranteed return and capital protection. But do you know that you can also buy bond funds listed in the Singapore Exchange? On Mumu, you may access them via bond ETFs like ABS and MBH. Or if you want a bond fund ETF, you have the newly listed SBO. Next, let's talk about precious metals, which are used in our industrials or manufacturing, and even some people hold it for investments, and those are like gold or silver. Precious metals do not generate income or have any business value to it. But where precious metals really shine is in the form of a hedge against inflation, uncertainty, and market crisis. In fact, precious metals has broken all-time high, especially this year in 2025. But I do understand that precious metals is not for everyone because it really does not generate any form of income or cash flow. But for those who really want exposure to precious metals without really buying into the actual precious metal itself, you can take a look on Mumu app. There are existing ETFs that track gold or silver prices, although they come with a small management fee. So I guess if you really want to take away the logistics, the security, you don't want to manage it yourself, put it in a safe, ETFs for precious metals are a way to go. Next up, let's take a look at cryptocurrency. And when we talk about cryptocurrency, I'm just talking about the mainstream, the top few cryptocurrencies. As of the year of 2025, cryptocurrency is still a very high risk investment because it comes with high volatility. So in my opinion, it's only good as a small position in the form of hedge against inflation and fiat currency devaluation. But compared to the past where cryptocurrency access is really limited to that few exchanges, there are now many ways to gain exposure to cryptocurrencies, whether by purchasing coins directly through crypto exchanges, investing in cryptocurrency focused ETFs, or you can do so by buying shares of companies with significant crypto exposure. Next asset is hardly talked about, and that is business equity. So it derives from your own business valuation coming from your own business or your side hustle. And I'll tell you why it's the most overlooked asset, because you may not even realize that you have business equity, especially if you have a side hustle. Because you do realize that if you spend more time investing in your own business or side hustle, it can generate you far more returns than any other forms of investments because you put the time and the effort into it. It may even be a 10x return if your proof of concept is already there and you scale it up. Then you quit your full-time job and focus entirely on this business, because that's exactly what I did for this YouTube channel as Honey Money SG, and most recently Solo Biz, where I built real companies focused on content creation and business consulting. And I can assure you 100% that investing in yourself and your skills is far more important than investing in markets, because there's a controllable outcome. The more time and effort you put it in, the more expected results you will get. And it's not uncontrollable like market volatility. So I really urge everyone to start looking at your side hustle or your own business to improve in yourself and your own skills. Lastly, let's talk about cash, which is the safety net in your asset allocation. Why should you still hold cash when the currency is devaluing with the more printing of money? Because cash protects you from downturn and gives you dry powder for opportunities that you may want to pounce on. If you ask me where I put my emergency or liquid cash, I'll prefer to put them in high interest savings account where I have access to them immediately when I need it. Although the rates are really decreasing over time, but I still feel that they are the best place to put your cash for safety and for a little bit of interest returns. Now moving on, let's give a target asset allocation example for someone in the 30s. And I'll be using this example for myself, but it may be different from person to person. So assess your own situation, then go and make your own asset allocation. So for me, firstly, largest will be 60% stocks or ETFs, followed by 15% real estate, 10% in bonds or fixed income, 5% precious metals, 5% cryptocurrency, and lastly 5% cash, plus any business equity that you're building on the side. So I consider that additional. And note that this asset allocation will change over time as you age. So you have to adjust it based on your goals, your timeline, and your own risk appetite. Now I know after talking so much about asset allocation, you may be overwhelmed. So many platforms, so many things I have to buy. Does it sound too complicated to manage so many investments? Well, the good news is you don't have to go around multiple platforms to open multiple accounts to invest in all these multiple assets. Because with Mumu, you can invest in stocks, ETFs, REITs, bond funds, gold ETFs, and even more, all in one single app. For example, in the Moomoo app, you can find all ETFs for related indices. You can also sort by AUM to see the most active ETFs in the market. Moomoo also has a comparison feature, and here you can find all the differences between them, especially the fees and dividends. If you want a quick way to evaluate an ETF's performance compared to similar ETFs, you can also look at specific analysis like the Morningstar ratings. Basically, Morningstar gives the top 10% of funds in each category 5 stars. The next 22.5% 4 stars, and the rest 3 stars or fewer. These star ratings help you quickly see how the ETFs compare with its peers. If you search for Morningstar ratings online, you will realize that it is a paid service. However, you can use it free on Mumu, which helps you save the cost of the subscription. And right now, Moomoo Welcome Rewards campaign give you exclusive bonuses when you sign up with my link. You can get 20 Singapore dollars of NVIDIA shares when you just deposit 100 Singapore dollars. If you had more funds, you may qualify for more rewards based on the cumulative deposit tier, up to 550 Singapore dollars of NVIDIA shares and 550 Singapore dollars of trading cash coupons. Terms and conditions apply. That means you can kickstart your asset allocation with a positive head start. I'll leave my exclusive link in the description, so check it out if you're ready to build a smarter and more diversified portfolio with Mumu. So at the end of the day, asset allocation is the foundation of financial success. In the long run, it really doesn't matter how much your individual stocks portfolio have gained, because stock tips may come and go, but your asset allocation strategy determines whether you really hit your goals. So don't just chase the next hot stock. Focus on building a balanced portfolio across all these different asset classes, and Mumu can help you with that with just one single platform. Remember that your AUM growth is more important than your stock's return growth. So think holistically about your asset allocation, especially your personal growth in earning capacity and business equity. And don't get trapped by the vanity metrics in your brokerage account. And if you want to learn how to invest for beginners in the year of 2025, especially for Singaporeans, then you may check out my previous video right here.